Hi everybody, I'm just gonna start while we wait for the last people to get into this room to apologize to the online audience. They're sitting behind this camera, but also you who made it physically here. When you sneeze or talk to your neighbor, the camera is gonna film you because there's a sound detection. Wow. So we're gonna have to ask all of you to either clap together, but otherwise it will film your part. Yeah, don't laugh like that, John. It will be picked up. So you're gonna have to. Yeah, no, I know that's not. So that's one technical announcement. The second one is when this is over, so we have the speakers from the program that you've all read, and thanks for making it here, both physically and online. We are delighted to see you back. We have an outdoor dinner afterwards. Yes, but we have to go to the 8th floor to do that. Now, last time when we were hosted here by DLA Piper, it took a lot of time to get you all out of this room. So this time, I'm giving you already the expectation management. We want to see you go up to the 8th floor and enjoy the outdoor and the food that is served for you there. So this was my pleasure for the practical announcements. I'm looking at Alessandra. Are we ready to start? Ready to roll? Very good. So I'm going to invite Pierre Berger, who's a partner at DLA Piper and our host, to start opening this evening. And for all the speakers and also for those online, we have to make signs for the slides to advance. So if you see the speakers doing something like this, it is just a sign to get the next slide. The floor is all yours.
Thank you, Tom. Welcome all. It's a pleasure to have you here. I'm also happy to see so many faces, known faces, unknown faces. But it's certainly the first time we have so many people in this room since COVID started 2 years ago, more than 2 years ago. So it's great to see all of you here. Topic of today, crypto assets. Crypto assets have never been so much in the center of debates and actuality, as you know. The high volatility of their prices, the increasing adoption of crypto assets by traditional financial actors, and the debates around recognition of crypto assets as national legal tenders do not stop to for whom nearly a quarter qualified cryptocurrencies as their best investment in 2022. So 1/4 of you, according to a recent barometer. Benoit Says will probably say a word about that. Benoit Says is a bit for you, and I hope that you will collaborate a little bit on the popularity of cryptocurrencies and investing in Further, a recent report of the National Bank of Belgium shows that the Belgian banking sector still rather sees cryptocurrencies as a threat than as an opportunity, and considers that crypto initiatives and to discuss the necessity to establish a legal framework. And finally, in February 2022, the Belgian legislature, following some other European legislators, introduced a new regulatory framework to regulate the provision of certain services on the Belgian market. This new Belgian regulatory framework must be seen in the broader context of legislative initiatives at the European level. With regard to crypto assets, the EU Digital Finance Package, a number of you will certainly know, and the new regulatory framework related to AML, the EU AML package. I'm quite sure that Maria Staskiewicz from the European Digital Finance Association will say a word about those European initiatives, and I'm quite sure that Simon Corot will also say something about the European crypto initiatives currently ongoing. If we then look at the Belgian legal framework, and we want to kick this evening off with the Belgian legal framework, I would like to pass the word to my colleague, Nicola and Alexander, to introduce you in the Belgian regulatory framework. So both of you. Okay, hello everyone, thank you for being here. Happy to be here with you tonight to talk about the new Belgian regulatory framework related to the provision of crypto asset services in Belgium. So this will be our topic of the day, and we will see the agenda on the slides. Okay. So we will start as an introduction to present the context of this new legislative initiative in Belgium. We will then present its scope of application from material, territorial, and personal perspectives. Then my colleague Alexander will explain you the new registration requirements to provide virtual asset services in Belgium. And finally, we'll explain to you when all those new dispositions will come into force. So we can switch to the next slide. So let's start by the context of this new Belgian initiative. So actually in 2018, the fifth directive on anti-money laundering, AMLD5, Directive 2018-A43, extended the scope of EU AML requirements to include two new virtual asset services providers. Those two services providers are providers of exchange services between virtual assets and fiat currencies, and also custodian wallet providers. This AMLD5, this directive has been transposed into Belgian law by a law of 2020 that has amended our Belgian AML Act, the law of 18 September 2017. So this means that actually since 2020, those two services providers are already in the scope of the Belgian AML requirements. But what was missing is the proper implementation of those requirements that has been done recently by the Royal Decree of 8 February 2022, and it's exactly the scope of this new Belgian VASP framework, but actually not only, because the law of 1st February 2022 amended the AML Act to introduce new dispositions related to virtual asset services providers, while the Royal Decree of 8 February 2022 introduced new regulatory requirements and rules of functioning for virtual asset services providers, but also registration requirements with the GFSMA. And of course, it's important to mention that the GFSMA has already published guidance on this new framework under the form of FAQ. So this is it for the context. We can switch slides. Okay, now we'll present the scope of application on the new framework. We can switch slides. Yeah, okay, no problem. Okay, so we'll present you the material scope of applications of the new VASP Belgian framework, presenting which services are now going to be regulated in less than 10 days, actually, to which assets those services need to be provided, and then mention the territorial scope of application. First, from a material perspective, it's important to understand that not all services related to crypto assets will be regulated under the Belgian framework. Actually, it's quite limited. Only two services will be regulated. These are the services, the exchange services between virtual currencies and fiat currencies, and the custodian wallet services. So only those two services will be regulated under Belgian law, at least under this new Belgian framework. And so this means that, for example, other services are not part of this Belgian framework. The issuance of crypto assets
ICOs are not part of this Belgian framework. Investment advice on virtual assets is also not part of this framework. And similarly, an exchange platform that would only allow exchange between virtual currency would also not fall in the scope of this Belgian framework, because the services covered is only exchange between fiat currencies on the one hand and virtual assets. So if it's only virtual assets, it does not work. And still, those two services, to fall under the Belgian framework, they will need to be provided on virtual currencies. And virtual currencies are defined in the AMLD5, so the directive I was just referring to. So virtual currencies are the digital representation of a value that is not issued or controlled by a central bank or a public authority, that do not have the legal status of money, but still are recognized as a means of payment. And this characteristic as means of payment is the essential feature of virtual assets. And actually, it also excludes all other forms of crypto assets that do not have this feature of recognition as a means of exchange from its scope. So, for example, investment token, security token, do not fall in the scope of the new framework. And the same goes for utility tokens. So we see that actually the material scope of application is somehow quite limited. And now we will explain to which entities this new framework will apply. So again, in the AML framework, there is a limited, no, we can stay here, no problem. So in the AML Act, the Belgian AML Act, there is a strict territorial scope of application. So who will be required to register with the FSMA in order to provide virtual asset services in Belgium? We can identify two groups. First, Belgian entities that intend to provide virtual assets services related to virtual assets in Belgium. Of course, those ones fall under the scope of the Belgian AML Act, of course, but also the VASP framework, and will need to register with the FSMA prior to providing their services in Belgium. But not only, actually EEA entities that intend to provide their services in Belgium and that have a physical presence in Belgium will also need to register with the FSMA. And so this comprises three groups. So EEA entities that have in Belgium a branch. So if there is a Belgian branch, the entity needs to register with the FSMA in order to provide virtual asset services. In addition to a branch, any form of permanent establishment. This also triggers a requirement to register. And finally, entities that provide their services in Belgium through electronic infrastructures also need to register with the FSMA. So this is a new category that has been introduced by the VASP Act in order to target Bitcoin ATMs, for example. So we see that Belgian entities, EEA entities that have physical presence in Belgium need to register. This also means that actually an entity from the EEA that would like to provide its services in Belgium, but with no physical presence in Belgium on a cross-border basis, does not need to register with the FSMA. So this entity is allowed to provide virtual asset services in Belgium. Now we have defined which entities are allowed to provide their services in Belgium, but there are also entities that are not allowed to provide their services in Belgium. And what we believe is one of the most important elements of this VASP framework is the introduction of a third country ban. This means that entities governed by the law of a country that is not member of the EEA are prohibited to provide their services in Belgium. And I say are prohibited because this disposition is actually already into force. It came into force in February 2022, while the rest of the framework will apply as of May, so as of next week, the 2 next weeks, with some derogation. We'll talk about it later. But this prohibition is already into force. It may seem a bit strict at first, but actually the Belgian
double. So instead of 8,000 euros, it will be 6,000 euros a year. And in terms of procedure, the procedure then is entirely digital via email to the FSMA. And the FSMA will take a decision within a period of 3 months after submission of a complete dossier. So we have seen in other financial services that this period may be extended because the dossier isn't complete yet. An important aspect of the Belgian VASP regime is the absence of a European passport. That completely makes sense because there isn't an EU framework yet. So there are jurisdictions that allow market access by VASPs registered in Belgium or in other jurisdictions. So de facto, for some VASPs, there will be access to other jurisdictions, but in principle, the VASP framework only applies in Belgium. Next slide. Then the actual registration conditions. So timing in mind, I'm going to keep it high level and I've selected some conditions. So first of all, there are corporate substance requirements. So the central management of the VASP has to be located in Belgium. So for Belgian entities, both the head office and the central administration have to be located in Belgium. For branches, a local point of contact has to be appointed, and the central management of the Belgian activities have to be located in Belgium. There are capital requirements. So as you can see, the registration conditions resemble to conditions applicable to financial institutions. The prudential requirements is sort of a light regime and resemble to conditions of financial intermediaries, and is slightly different. So, for example, the capital requirements are obviously much lower than financial institutions, but much higher than financial intermediaries. So a minimum capital fully paid up of 50,000 euros is required. Then for senior managers, so senior manager is not a legal term, it's effective leader or effective leadership, that's the term. Fit and proper requirements apply. It's not yet entirely clear what requirements apply. According to the law, senior managers must have expertise, but what that expertise precisely is not clear. Or academic degrees required, or certain experience. So this forms part of the discretionary assessment of the regulator of the FSMA. The same accounts for the shareholders. So shareholders have to be suitable to ensure a sound and prudent management of the VASP. Any shareholder having a holding of more than 5% have to be notified, not approved, notified to the FSMA. And in particular, when the shareholder is located in a jurisdiction that may prevent the effective supervision of the FSMA, the candidate VASP may encounter some problems with the registration. So, on first sight, obvious condition, AML compliance is very relevant to mention, because a breach of AML compliance can not only lead to sanctions under AML law, but can also lead to a suspension or withdrawal of the registration of the VASP. So it remains important to comply with anti-money laundering laws and regulations. And then finally, one important registration condition is the adequate organization of the VASP. What that means in practice is, again, not entirely clear. So this depends on the discretionary assessment of the FSMA. But as Nicola mentioned, there are FAQs published on the website. And for example, there is this FAQ on outsourcing, which is an important topic, because in most cases there will be imported outsourcing to other group entities. And there are conditions set out by the FSMA that are not laid down in law, but that are published on the website. So these are, in my view, the most principal registration conditions on a high-level basis. Can I have the next slide? First the timeline. So if you register as a VASP, so first of all, this new framework entered into force on the 1st of May 2020, will enter into force. However, there is a grandfathering provision for existing companies. So in a first stage, they will have to simply notify the FSMA by the 30th of June 2022. And they must submit a formal application, so a complete dossier before the end of August 2022. And then the 3-month period for the FSMA starts to approve the registration. One big question will, of course, be what will be the impacts of MiCA, the European regulation. Will this entire framework, not only the Belgian one, but also the other ones in the EU, will they cease to exist after the final adoption of MiCA, which will most likely be the case. So finally, my last slides, in terms of concluding remarks, I think we very much welcome this framework. It provides legal certainty, and for some players, they know how to register and what registration conditions they have to comply with. However, there is still a strong need for harmonization on a European level, because currently there are large divergences between member states, which may lead to forum shopping and legal uncertainty, because conditions in one member state may not apply to another. But I think the next speaker will now provide more details on the forthcoming European regulation, MiCA regulation. So I'm very interested to hear her views. Thank you.
Our next speaker is Maria. Already get up so that you get to see if your slides are there, because I see they're not yet. Maria is from our umbrella organization, where Fintech Belgium is a member, European Digital Finance Association. So for all of you who are members, I've been asked to tell everybody here, you can still become a member if you are active in this industry, also the crypto companies, and then talk to Alessandra, because we would love to welcome more crypto providers ourselves. Now that you are regulated, you have a new home to adhere to. You're going to give us a European perspective.
Yes,
so
I'm going to do it.
Maria.
Thank you. In a nutshell, thank you for the invitation. MiCA stands for Regulation of Markets in Crypto Assets. That the European Commission published in autumn 2020 as part of the digital finance strategy. It was one of the very first acts of the new strategy of the European Commission, of the new European Commission, focusing on digital finance. Can we get back to the first?
Give a second. There's a bit of delay for all the speakers between you giving the hand sign and it happening on the screen.
We'll probably be holding the I'm going to move my hands too much. It was, I would say, I see the first global take at regulating crypto assets, and it sprang from two needs. First was already mentioned by Alexander, the need for harmonization of rules pertaining to crypto assets, and the second one, which I think was more determined why the Commission was so quick about writing MiCA, was at the time the idea of that was presented by Facebook to introduce Libra, and of the Commission, and I would say it was even more the European Parliament, that they got scared that the national currencies now be endangered by a currency that would be issued by American big tech. So they probably pressured the Commission to be quicker about it. After quite a short period of time, given the European procedure, we are in the final stage of discussion and negotiating the final text of this regulation. And to answer the first question of where we stand with MiCA, I chose to use a picture of a satirical account. Some of you who are in the European policy affairs, you may know the DG MEM. If not, I really recommend following that. They really have they make funny jokes about EU policies. So where are we now? There was the proposal of the European Commission that you can see on your left-hand side, and now we are after the third reading in the Parliament, where especially members of the European Parliament introduced their ideas of how this act should be changed, amended, and bettered, etc. So you can see that the state of the text is a little bit less neat than was at the very beginning. However, I still think it is a very good text, given the fact that the European Commission has to harmonize the interests of so many member states. To give you a very brief summary of what MiCA brings, I would need the next slide, please. This is a very long regulation that is still doesn't have its final text. So please do not take it for granted. Do not take everything for granted that you can see. But what MiCA does, it regulates crypto assets for the first time in the EEA area. So we will have harmonized rules for issuers and those who will be offering crypto assets publicly. There will be rules for the admission of crypto assets to trading platforms, and plenty of rules for those providing various crypto assets services, which is something I would say not everyone who is into crypto business still understands and know what is coming, that even those who are merely providing services in the area will have to obtain a certain type of a license. What next? The MiCA introduces new types of regulated activities. These are the asset reference tokens, which are tokens that are whose value is pegged at a basket of currencies or an asset, be it a commodity, etc. Another type of newly regulated service will be the e-money tokens. These are sort of a asset reference token that will be pegged at just one currency. And there will be another third category of regulated activities, the other crypto assets, which is a catch-all group. Well, all other crypto assets will be put. MiCA does another important thing, which is clearly stating that all the crypto assets that bear all the signs and feature of already regulated products and services like financial instruments under MiFID, deposits, structured deposits, securitization, etc. If those instruments will be issued on DLT, they will fall under the current regulation that handles those let's say traditional services. Next slide, please. So those newly regulated entities will have to meet new obligations. They will have to obtain a license and comply with specific requirements on the capital, how they conduct the business, how they are governed, and because people who wrote the regulation, they are mostly people who had been working on financial instruments on MiFID. The MiCA, to some extent, resembles the reasoning of the MiFID regulation. Also, the crypto assets issuers will have to publish a white paper, and that white paper will have to be either notified or ex ante regulated by the regulator. The issuers and traders will have to have a registered office in one of the EU member states, at least in one EU member state. And those crypto assets issuers and service providers who are outside of the EU will have to comply with MiCA if they actively promote and sell and provide their services on the EU territory. So this is just in a nutshell of what MiCA will bring to the crypto asset service providers, issuers, and trading platforms. So now we are coming to the most important part of the presentation, which means we're going to skip this slide, which I may go back in the Q&A part. After this after the period of discussing both in the Council among member states within the European Parliament, both of these two institutions came up with their final text, final proposition of how the regulation text should look like. And because these two institutions have different views on specific points, now the final phase called the trilogues is taking place, where the member states, the Council, European Parliament, and the Commission sit at one table and try to compare the amendments and decide whose opinion is winning. If you were really interested in the document, it has, I think, almost 900 pages. So it's just a comparative document, so that's why it's so long. But it's a very tough and mostly technical task ahead of those sitting in those trialogues. And to be frank, in most areas they do agree, but there are several interesting points where they disagree, where they have different view, or where one of the institutions had wanted to add something new. What MiCA does, for example, is that it gives supervisory powers to European authorities. And for example, there is disagreement between which types of the newly regulated crypto assets will be supervised or accepted by who will be the supervisory or accepting European authority. So, for example, the Council says that for significant asset-related reference tokens and entities is going to be just European Banking Authority, while the European Parliament thinks that ESMA, the Security Markets Authority, should have a say and should have say in supervising the significant asset reference tokens and also CASPs. So this would be a little bit, I would say, a novelty in the realm of regulation, where ESMA would be supervising all crypto asset service providers. Because the crypto asset area is evolving very quickly. At the time when the Commission was preparing the proposal, the DeFi was not still of such an interest to the regulator. There were no mention of how to tackle DeFi. In the meantime, both institutions inserted some new texts and ideas how DeFi should be tackled by MiCA. And for example, member states, which is the Council, entered a text in the recital that a specification, that clarification that DeFi applications are covered by MiCA, and in the review process of after the first 18 months of the implement of MiCA being in force, there will be a special report whether DeFi should be looked into in more detail. On the other hand, the European Parliament, for example, introduced a definition of DAOs and explicitly stated that DAOs may also be issuers of crypto assets under MiCA. One thing that you may have heard of was the climate impact of the debate about the climate impact of crypto assets, which took place last month in the European Parliament, when the European Parliament almost banned the proof of work, the crypto assets based on proof of work. Finally, in the version of the European Parliament, we only have new obligations put on crypto assets, saying that the information about the climate impact should be added into the white paper. Also, that the crypto assets treatment should be included into the taxonomy of financial services. Next slide, please. There's still, sorry, the one before. Yes. Also, the initial text was not so explicit about NFTs. So the council, the member states, explicitly said that NFTs are outside of the scope of this regulation, while the parliamentarians who prepared the text a little bit later than the member states, in the recitals, I think, put a note that the EU should consider if a special regime for NFT and security tokens should not become a thing of debate for the future. And one other important place where these two institutions disagree is whether crypto assets issuers, all those new regulated entities outside of EU should be at all allowed to offer their services within EU, and member states say that the so-called reverse solicitation, when a consumer is searching for and consuming actively a service, and this should be allowed, while the European Parliament, which is more prone to be pro-customer, customer protective, says that those non-EU legal entities that are actively promoting their services in the EU in the EA area should have a legal representative and be licensed under MiCA. And a final word in the final slide on the timeline. The trialogues where these two institutions, with the help of the European Commission, discussed the final text, might be closed during the French presidency, which ends at the end of June. If there still will be some outstanding points, the Czech presidency will close the debate, and then after adoption of the final text by all the institutions, it will be published in the official journal, and after that, the MiCA will enter into force and will be applicable either 18 or 24 months after entering into force, and this is another point of disagreement between these institutions of when exactly the implementation of MiCA should take place. But most likely we should see MiCA being applicable as of early 2025. And with that, I'm gonna give the floor to the next speaker, who hopefully won't be as detailed as myself. Thank you.
While Mathieu Derel from BNP Paribas comes up front, I will invite our online viewers, such as Koen Rens, who has already formulated a very nice question, to also prepare their questions. We have a panel after the speakers, so for those in the room, prepare your questions here, and for those watching us start typing, your question will be actually projected on the screen behind us, so everybody will see it. You are the expert in open banking and payments, and you know a lot about what's challenging about crypto for a bank. So tell us how BNP Paribas looks at this. Go ahead.
And I'm in the right spot because we started with those that see it from the customer protection / risk perspective, and we go later, I guess, for those that see it from more the opportunity. So I'm in the middle, I would say. So Mathieu Derel, nice to meet you all. So I work for BNP Paribas in cash management. So most of my job is to make partnership with fintech. So normally I'm in the right space. And I also work a lot on digital assets for the group. So this is what I will tell you today. So it's not really a statement of BNP Paribas, it's more my experience in financial industry. And I'll try to show you a little bit the way banks are seeing this. So of course, all banks see the growing interest in digital assets. So we see it every day. So we are exposed from retail customers with wire transfer to exchange platform to corporates. We have corporates that want to issue NFTs, that want to go to the metaverse. We have institutionals also. So we see the exposition coming. We know we have to address the topic. So I think most of banks are also building the canvas, the proper canvas to build this topic. I think that the challenges that we see on this and the way to make, let's say, this new ecosystem compatible with the banks is three things. First, we need clarity on the regulation. So that's, I think this is for sure. The challenge here also is the regulation complete enough, because we've seen that you're regulating the exchange platforms, the custodian, but do you regulate the asset? Do you regulate the miners? Do you regulate the blockchain providers, etc.? So is it complete enough? Do we have, I would say, all the pieces of the puzzle? Another challenge in the regulation as well is that you may have difference of interpretation between continents. So you have Europe that sees in a certain way. You have the States that may see in a different way. So, for example, when you talk about stable coins, in Europe, we have a tendency of creating specific categories. We have commercial bank money, we have e-money. Tomorrow we have e-money tokens. In the States, everything is a commercial deposit. So this, for banks that operate in many jurisdictions, it's a challenge. So regulation definitely is something that we will look at. Second thing is also to have a sort of same level playing field in compliance. Compliance, definitely, I was going to talk about compliance. And the third subject is also the lucidity, I would say, in the long-term use cases. So I'll just take a few minutes to talk about the taxonomy, because of course you have many different digital assets in financial markets. They all share the technology, they share a bit of the narrative, but they do distinguish a lot with what is behind. And I think that it's really important that customers really understand this difference. So the way we see it is always to ask ourselves, okay, so what's the underlying financial product? Is it regulated? Who is the issuer? And so the quality of the issuer is important. And also, what's the use case? So if I take, you could categorize them like in asset tokens, payment tokens, and more exotic tokens. So the asset token is security tokens and so on. So this is basically a traditional financial instrument, such as a bond, that you just tokenize and you distribute it in a public blockchain. You do that to increase liquidity, the things it can do with programmability. You can pay the bonds at maturity, for example. But this is clear. You have a traditional financial product. You're just using another technology. So it's security token. It's in MiFID. The issuer is probably a bank or a company. But more or less, you know where you are. If you take the other extreme, you have cryptocurrencies. So I'll have probably the same discourse that banks have for many years now. Of course, we don't see this as potential currencies. Today, you have around 9,000 cryptocurrencies. Any software developer can create its own money. Of course, it's different in terms of significance, but you don't have access to central banks' money. Sorry, guys, but this is something that you need today if you want to manage, in terms of shock, manage inflation, and so on. Then I heard also Pierre that was mentioning the volatility. Volatility, at the end of the day, is not really the issue. You know, a bank, we have lots of products that are volatile. You see with the Ukraine-Russian crisis, you see that even some shares were very, very volatile. So it's not really the issue. The issue would be probably more that you don't always have an issuer. Bitcoin has no issuer. Or if you have an issuer, you don't have a claim, an unambiguous claim on it. The second problem that you have is that the product itself is not regulated. All regulators don't agree on what it is. Is it a security? Is it a new asset class? Then you have this. You have also the manipulation of the market, liquidity risk, and so on. But I think that these are the main problems. So defining what's the product, defining who is the issuer, and the use case. So the use case today is mainly speculation. It's not that speculation is bad, but it's mainly this. You also have the fact of some countries that have currency that are very, very volatile, and you also have the fact, the anonymity, the fact of avoiding sanctions. When you look at countries that use a lot of cryptocurrencies, you have Russia, you have Iran, countries that face US sanctions. So this is for cryptocurrencies. You have the middle, so the gray zone, so stable coins, NFTs, etc. There, the reasoning is the same. So who is the issuer? Is it a regulated entity? Do you have the license? Are they audited? And so on. What's the product? And what's the use case? So stable coins, I think it's still the beginning. The main use case today is still to be economically exposed to fiat currencies when you're trading, but there are potential, and for sure all banks are looking at the potentials to solve issues that we all know in payments. Then you have NFTs, utility token. NFTs, I mean, you see a big boom in there, lots of problems also of consumer protection. So you definitely have a regulation. I heard you speaking about MiCA wanting to bring that in the regulation. It's a challenge, we understand that. It's a moving target. If you try to put NFT in MiCA, we'll have MiCA in 5-6 years. And in 5-6 years, we'll be somewhere else. So it's difficult. So I talked about regulation, compliance, definitely. So anti-money laundering, counter-terrorists laws, these are there to protect society. I think everybody's happy that you have banks now that can apply the sanctions against Russia and so on. The thing is that these regulations, they were made at certain points in a way that financial industries had to always identify the people in a transaction. It was built in that way, okay? And so there is a big gap between this and Bitcoin that was made originally for P2P transaction with anonymity. And I was last week in Paris, the Paris Blockchain Summit. You see a whole industry full of young people that want decentralization, that want self-custody of digital assets. There's a big gap between this and the way the financial industry is protecting society today. So we definitely need education on both sides. We also we recognize it's important also the travel rule from the FATF that will impose also on the actors to put the names of the originator, the beneficiaries of each transactions, and so on. But that being said, we're not against innovation. I think that most banks are doing projects. They're starting to use public blockchains. They will probably do more later in the future, always together with prudential authorities, but always in places where you have full transparency. Transparency is in the core model of banks. You know, in banks, everything needs to be looked at, it needs to be recorded, it needs to be investigated. We spend a lot of money in compliance. We always have to report to regulator in all the countries where we operate. So yeah, transparency for first, it's important. It doesn't mean that tomorrow you cannot do it in another way. The technology may bring us ways to do the same controls, but differently. So there is education to do there also on both sides, because that's important to understand is that banking is a profession that has a risk mentality. It's really about risk, and it's not because you're good in technology that you're good in banking. It's a very different profession to some extent. So this is where I think both the people that are coming and all these new talents and the bankers, we need to start educate ourselves in both ways. So I think that the conclusion is this, that the fact that technologies can help us to do things differently is positive. I think that this is collective history that will show what was useful, what was not useful. We see that the major change that digital assets brings is a change in the format at the end of the day. It's just that instead of having items sitting in a bank account, you have token in a distributed ledger. So we have to educate ourselves on this. And as I mentioned, the three key points for us will always be first, use cases. So it needs other use cases than just speculation and avoiding compliance rules. We need the complete regulation with all the pieces of the puzzle, and also a sort of coherence also between jurisdictions. And we need education and acculturation. And this is what we do in banks a lot, to explain to both sides a little bit the way we are handling compliance and the way we can protect consumers and protect the bank. So that's basically what I wanted to say. Thank you.
Next up is a guest who traveled from Amsterdam. I saw you coming in, so welcome. You're going to talk us about a DAO, the fashionable big thing to do. You used to do startups, and now you're into DAO. It's like the perfect.
Yeah, it's the perfect switch.
It used to be cool to do a startup, and now it's cool to do a DAO. Tell us all about it.
Well, the startup was also in payments, so
Yes.
it kind of makes change after that to switch.
Yes.
And
I know that the gentleman had a wallet before it was fashionable and before the.
Yes, I did.
everyone it. So,
I did it
go
before
ahead.
it's fashionable. First of all, I want to thank Fintech Belgium for inviting DAO Brussels here. The team, unfortunately, is in Amsterdam still at the DevCon. I just came right now to come and meet everyone here. So basically, DAO Brussels started 7 months ago. First off, does anyone here know what a DAO is? Can you please raise your hand? That's great. Have anybody here heard of DAO Brussels? Yes, that's great. So with the team of contributors, we're creating this, let's call it Decentralized Community. And what we're really trying to do is to help people in Belgium, and especially locally in Brussels, doing meetings in real life to meet together and to learn more about this new industry, which is very disruptive. Also, we're starting to get more people interested in creating their own companies, and what we're trying to do is to always put them in touch with someone else. We have events such as Crypto Wednesday, which we do once a month at a place called the Citizen Corner. And we also have a new event, which is coming out in May 19th to May 20th, called Regions, where we will have a lot of conglomerates from the crypto world that are actually coming to Brussels to discuss with EU regulators or climate activists about how this technology can improve us to move forward. So I invite anyone here who wants to know more about DAO Brussels to just talk to me afterwards. If you want to participate, enter the Discord and talk with people. We need more contributors, and we'd love to have everybody here joining us. So thank you for the 2-minute presentation.
You get 1 minute extra to tell us what's happening in Amsterdam. What's the hot topic there? So our speakers can
Wow, so there was a lot of events. I went to the Daoist event, so it was an absolutely amazing event where we had some of the biggest DAOs in the world who were teaching us a little bit how they created their communities, or talking about regenerative finance, so new ways of changing the system that we have today to make it a better one, a more sustainable one, using crypto. So there were about 200 people invited. I luckily got invited with some people from DAO Brussels, and it was just 2 days of a lot of information. Then I also went to other events, such as some developer events, because I was interested also to know about certain technology stacks. And so it was a great way to meet new people inside of this conference. It was actually incredible the way it was organized. There were basically DAOs and crypto institutions from everywhere in the world. And Amsterdam was filled with, I would say, geeks and passionate of fintech. And it was great to see people from different backgrounds just talking to each other and just really sharing. There was a lot of sharing, and it was really positive. Not that typical toxicity that we see of, crypto that stays on Twitter and probably lives in his mother's basement waiting for Bitcoin to go to 1 million. That was not at all the mindset. The mindset was really great people who have interesting backgrounds to mingle together and to try to make the industry a bit bigger. So there's going to be a next DevCon in Colombia, Bogota. I highly recommend you to check it online if you want. There's going to be a lot of interesting profiles as well.
Thank you very much. Next speaker is from the regulator, but before I do that, I'm going to open the chat here so everybody gets to see it. And apparently, I need to do it on this screen. Yes, so we will give your full name is being asked already. So you did a good intro. Gatien Laga, you're going to explain how the FSMA looks at this. The new regulation, and maybe explain a little bit also, because it's a very vast area. Yeah. The NDB, the FSMA, 2 Belgian regulators, the difference, and what's your expertise and your field of application. Thank you very much.
Thank you, too. Good evening, everybody. So, yes, I will not spend too much time on the supervisory architecture in Belgium, but maybe for those who are not very familiar with this, it's a interesting to say a word on this, and especially as regards the split of competences between the National Bank of Belgium and the FSMA. So to make a long story short, the National Bank of Belgium is the traditional prudential supervisors on the banks, insurance companies, payment institutions, very shortly. So, for example, all questions as regards the payment services are on the competences of the National Bank of Belgium. The FSMA, yes, we can move to the next slide. So the FSMA is competent basically for the consumer protection and also for the financial education. That was also an important point of the previous speaker. And indeed, we strongly believe that this point is crucial if we want to reach a safe financial world. So financial education, consumer protection, and regulation of the financial services. Basically, I think I can summarize the main competence and the main missions of our institution with those words. If there are some specific questions on this, I'm very happy to answer on those questions after the presentation of during the panel. But maybe we can move now to slide 9. The first 8 slides describes those split of competence and the key missions of the FSMA. I give you this as background information. I guess that the presentation will be made available after this evening, and so you can have a look on this and ask questions if needed. So we can move to slide 9, please. Yes, next one. Directly to the 9. Yes. So the crypto assets world is, it's not a surprise, a changing world, but this is important for us and for you, because the message today from the FSMA especially is that innovation is certainly not bad. Probably you see the supervisor as a very classical entity, a bit reluctant on innovation. It's not the case, but it's important to say that the innovation is useful if it creates the condition to better financial service in general, and especially for the crypto services today. And it's also useful if it enhances the consumer protection. And in this context, we are strongly in favor of innovation because we think it's a really good thing. But it needs to be subject to specific legislation. And the legislation must be seen as additional guarantee to create a kind of safe harbor where the consumer are protected and can execute transactions safely. If you don't regulate, and it has been the case in the last years with the crypto assets industry, you are just in the jungle. And for specific professional, it can be very nice, but for the average consumers, it's too risky. So that's a strong message today. So probably the legislation is not perfect and will not be perfect, but it creates the quality standards in order that the average consumers are able to be in a safe area. And that's the role of the legislators. So as supervisors, we are here to ensure the compliance with the existing regulation and legislation. And if needed, to take enforcement actions. And we will do it. We do that already since years for the traditional finance. It will be the same for the crypto. No more and no less. So next slide, please. We cannot deny, I think you will agree with this, so we cannot deny that there are today a very high risk in terms of money laundering and financing of terrorism, especially through the blockchain and the crypto assets, or some types of crypto assets. it's a fact. We cannot be against this. I think it's at least the position of the FSMA, and I think almost all regulators in Europe or in the world today. But it's not a question of bad service providers necessarily. We don't believe this, but it's a fact that malafide persons are using blockchain and criminals are using blockchain to execute criminal transactions and to make money laundering or to finance terrorist groups. It does not mean that the service providers are bad, but we need to build a system where everyone try to fight against those criminals. It's not only the role and a question of a strong supervisors. We will play our role within the limit of our competences, but we are certainly not alone. The legislators play certainly a role. In first line, the service providers and the AML compliance officer, and also the FIUs, financial intelligence units of the different countries, and the law enforcement authorities. I could add the police department probably. Everybody should be on board to fight against those risks. Next slide, please. So probably it won't be possible to regulate all the blockchain and all kind of crypto assets. You have heard about the European initiative, MiCA. You have heard already about the national initiative. I will say a couple of words on this later on. But probably, I don't know if the comparison is good or not, but it's a bit like internet. You cannot regulate internet. You can regulate some website, and you can secure some exchange between websites or between actors on the net. But we see the blockchain a bit like this. So regulate fully the blockchain and all stakeholders, it's probably not possible. Even with just the innovation, as you said, MiCA will come within 3-4 years. Nobody knows today what will be the crypto world or the crypto industry within 4 years. So we take the view that, once again, what is crucial and important is to create a safe area where just the average consumers can be confident and can execute safe transactions with safe counterparties. And that will be I think the red flag that we will follow in handling the registration files of the regulated service providers in Belgium. And even if the regulation does not put specific requirements on everything, my message today to you, or at least to the industry or to the players of the industry, would be that in any case, in any circumstances, please think about the consumers. And is your information on the website very clear? Is there a risk of confusion? So the consumer should always know if it execute transaction with a regulated entity or a non-regulated entity. If you are working with different type of entities, regulated and not, please be clear on your website what is the regulated area and what is not regulated. And in any case also, please be clear about the risk the consumer take in investing or in participating to what you offer to the consumers. The risk as such is certainly not negative, but it must be, the consumer must be clearly informed of the risk it takes. Next slide, please. So I won't be long on this because you have already received quite a lot of detail and very, very correct detail about the maybe one message again is that it's important to keep in mind today that it's just I just repeat what has been said previously, but it's important to keep in mind that today that the harmonized regime and the national regime remains very limited. We regulate only two types of service providers. The base of the regulation comes from the AML directive, so it's quite limited. It's a beginning, it's a start, but it remains limited, and we don't extend today the scope of the AML directive. So we don't regulate other types of service providers. Next slide, please. Probably, yes, before to speak about the European initiative, but this has been said also with the previous, by the previous speakers. The ATMs are a specificity of the national regulation. So I would like to stress this point. So a foreign company managing ATMs in Belgium will need to be registered at the FSMA. The legislator has decided this point because of the very specific risk of those ATMs. I will remain prudent today, but I think also that it's quite obvious that the money laundering risk with those types of machines is very high. So we will have a specific attention for the files of those companies, which does not mean that the registration is not possible, certainly not, but we will have a specific scrutiny on their process, especially as regards the identification of the clients. Next slide, please. Yes, maybe as regards the key requirements, I will not repeat what has been said, but maybe one additional information. So in the coming days, we will publish a kind of checklist on our website in order to help the service provider to build their registration files. And for those applying for a registration, we will send detailed questionnaires on those different teams, different aspects. The fit and proper of the senior management, the assessment of the shareholders, the organization with the aspect of IT security. It will be also one aspect that we will analyze during the registration. The FSMA will not conduct IT audits. It's probably not our mission or not our role. It would be a little bit overshooting as regards the competences that we have as regards this regulation. But we have expectations and we will communicate those expectations in those documents, and we will ask the applicants to demonstrate that the IT system is robust enough to meet those expectations. Next slide, please. So what are we going to do in the coming weeks and coming months? It's not a surprise probably that we will grant priorities to the handling of the registration files. You have seen that there is legal terms of legal period of 3 months to deliver the authorization, but indeed the period of 3 months starts if your file is complete, and that will be probably the challenge for you to come at the FSMA with a complete file with all information we would like to see and to analyze. But we will certainly put priorities on this. And in this context, I would like also to stress a specific point as regards the proportionality. Because we often heard about, especially for coming from small size entity, okay, I am small, so I don't need to apply this and this and this requirement, or I would like to get an exemption, to have an exemption. It's just not possible. So the FSMA is not the legislator. So we must apply the legislation. If the law or the royal decree does not provide for an exemption, we are not able to give this. So the proportionality is the fact that in applying the requirements, we consider the size of the entity or the type of the activity in order to calibrate the way this entity translates the legal requirements in its organization. And we will do it we do that for all entities under supervision, and we will do it also for the crypto service providers. In the context of the AML requirements, we will pay specific attention to two types of issues. It's the know your customer issue. It's not a surprise for you, I think. So the identification and the verification of the identity, and the transaction monitoring, permanent transaction monitoring. The other requirements remains, and you will have to demonstrate that you comply with all other requirements. But for those two types of requirements, we have a specific scrutiny, and the applicant will have to demonstrate that certainly on those two issues, that he has a very strong organization and strong internal procedures. And last but not least is the quality of the AML compliance officer. In first line, it's the compliance who must detect which are the suspicious transaction, which are the clients who maybe should be refused or should be mentioned to the FIUs. And so we will check the expertise of the compliance, because we strongly believe that it's really important in the organization of the service provider. But we would like also to be open for discussion with the compliance officer. So the supervisor can also be, in a certain way, a partner in order to exchange views on the interpretation of some requirements, legal requirements, or in order to explain specific guidance we provide through our website, for example. So both elements are important. The intrinsic quality of the AML compliance officer, but also the interaction between the AML Co and the FSMA. Next slide, please. So that was in a very nutshell and in some minutes the key message I wanted to pass today. You have heard that MiCA is coming, so we will extend at European level the scope of the regulation in terms of types of services, types of service providers, in types of requirements as such, at the level of the organization of those entities. It's a really good thing. The current situation, it's not easy. It's not easy for the industry, not easy for the supervisor, because we are facing different regulation per member state. It's really complicated to coordinate. So probably the European answer is better than the national answers, even if it's not perfect. We will have an harmonized framework, and that seems to us very, very important. In this context, we will continue to play our role, and we will see which type of competences the FSMA received by the legislator. But until MiCA, we are regulating those two types of service providers, and we will exchange with everybody want to get more explanation on the regulation or want to have a first contact with us in order to have concrete explanation on the way to introduce an application at the FSMA. Thank you very much.
We have a panel after this, and I'm being pushed to rush things through. But Benoit, come here. Benoit says it's from Big for You. So now we've heard all the regulation that is being put on the shoulders of this man.
This guy.
And you are the person that was a line about you there.
Yeah, indeed. Wait.
Where's the compliance officer?
I'm taking my notes because all the panelists, well, I'm very fond of what you said, and I have answers for everything. No,
You have answers for all wow.
but I have to be very cautious because I'm passing my exam, because we will be certainly the first to present our file as applicant to the FSMA. So I have to also be very careful about what I'm saying.
So we have to see if you're fit and proper.
Yes,
right? Okay, do your best. Enlighten us.
Okay, I was challenged by Pierre to give you some idea about what is the crypto market. First, who has cryptos? Feel free, don't be ashamed, Who use a platform? Okay, that's good. Who use a ledger? Less. Okay, those guys, we will talk about them. Okay, now, indeed, we had a discussion. Okay, I'm going to take the time so that I will not, it's 28. Okay, so we've seen the point from the regulator, the industry, the laws, and now everything comes on the guys who are putting that on the market or bringing this service. First of all, some questions. Do you know how many cryptos are there on the market? You said?
9,000.
Times 2. 18,000. What's the value of all the cryptos on the market? An idea?
5,000.
Okay. 1,900 billions. 1,900 billions. Okay. It's 1.9 trillion. So this is the order of magnitude. In which fiat is dollars?
Dollars.
Dollars. And a final question: how many users of cryptos are there in the world? 10 out of 10. 250. This rate. Okay. This rate of acceleration is faster than the adoption of any other technology in the world. Faster than TV or radio, TV, car, internet, mobile phone. It's amazing the speed it is. And we are playing with that, and it's indeed totally disruptive. So I will give you now some, at the point of view of a small crypto platform in Belgium. We are pure player, right? We just make the two services that the service of Mr. Laga will be regulating. We do crypto to fiat and fiat to crypto on the platform as well, and we hold the Bitcoins or the cryptos for our users. Next slide. And the next slide. Okay, a brief history to remind you what is the Bitcoin and what is the virtual asset. Okay, you remember 71, where the gold, you could go to the bank and get gold. That was abandoned in 71, the Bretton Woods. In 2008, we had this huge subprime issue under the Obama presidency. And at the time, it was the creation of the Bitcoin, where people wanted to get rid of a central authority in order to exchange in peer-to-peer in a safe way, where you cannot modify it to exchange value. And that is the infancy of the crypto being the Bitcoin. Okay, mainly peer-to-peer. Next. And we do not have to confuse. Indeed, there has been usage of money laundering, the cryptos for the money laundering, but it was in comparison to what is said the black market in French, le noir, it's much, much less, okay? The economy in Belgium, the black economy in Belgium is about what? Between 18 and 22%, okay, it's black, we don't know. What is going on the crypto to the blockchain, because everything is registered, is about 2.5%. This is the figures from Chain Analysis, with the big machine that is looking at all those transactions. So we are very happy that there is a regulation that is taking place, because we want to be the gatekeepers. And there is one thing we have not to forget: it's not the technology, and it has been underlined by several of the previous speakers. It's not the technology that's the problem, it's anonymity, where we don't know what we do, but we cannot control it, and you don't know where this money is going to. Next. So let's say, what are the regulations impact on a VASP, so for virtual asset service providers? Next, please. You have to imagine that we are swimming in an ocean, or in several oceans of regulation. You have all the KYCs and the KYB, meaning for know your business, for if you are dealing with business. We have all the anti-fraud measures that are also the customer protection measures. We have the KYT procedures with know your transactions, and we have all the AML, so anti-money laundering and avoidance of the financing of fraud. This is an ocean of regulation. It's an ocean of measure. At Bit4You, for instance, when you put all the lines or all the criteria that we have in those 4 main blocks, I think it's more than 250 criteria that can pop up an alarm, pop up a trigger, stop a transaction. So it's 250 different triggers that we have to analyze for each and every thing we are doing. Next, please. So you can imagine that we cannot do that by ourselves. Not a single small starting company. We are not a startup anymore. We are grown up, but we are 25%. You cannot know everything about each and every of those areas. So we are heavily relying on very specialized RegTech. And those persons need to clearly understand what they are doing. The typical outsourced thing that we are doing is part of the KYC, you know, the automated thing that you have when you are opening an account. It's a company called Jumio, for instance, where they take a picture of your ID. They make sure that this ID is a real document. So like a banknote, they have points to make sure that they know that it's a real document. Then they take a picture of you. They compare the picture you took with the picture on your ID. Okay, it's the same. And then you have to move your face like this, because they are using different point on your face to make sure that all those 3 elements are the same. We also rely on chain analysis. I told you, a coin firm, that's like the guy that analyzes any transaction in the world. So when the transaction is going from A to B, from B to C, from C to D, and then it goes out into the blockchain, well, into the darknet, so the dark web, from here, we know the way that it has been to the dark, or the way around. When we receive some blockchain transaction on the platform, we get a flag, hey, 6 months ago, this particular part of crypto was in the dark web. So everything can be traced. It takes time and energy, but it can be traced. And we cannot do it by ourselves. We heavily rely on those RegTech. Next, please. So, for one example of all what we said, there is the famous travel rule. You know what the travel rule is? Yeah, an idea about the travel rule in the regular bank or regular payment industry. So it's everyone has to know about everything about everyone. To make simple, nothing is anonymous. My service provider needs to know me, needs to know about where I'm sending money to, needs to know who is receiving the money. So it's a travel rule. Well, when you make a transaction, that's the reason why I asked the question first, are you using a platform? If you use a platform or a CEX, sorry, with a C, so centralized exchange, and you send money to a CEX, another CEX, it's not CEX for money, but okay, it's quite easy. That's the angel guy. It's regular value virtual asset provider. It's quite easy, isn't it? Well, the question now is a little bit more complicated. When you have cross from one wallet, a personal wallet, so we call that non-custodian, so ledger you have in your pocket. In fact, it's just the keys you have there. It's not the money because it's in the blockchain. That is coming to a VASP, or the other way around, when the VASP is sending money to one of those wallets. For the moment, it's quite totally anonymous. And that is what we want to fight. That is the problem about money laundering or financial of terrorism, is the anonymity of those non-custodians. The worst case, of course, or good, and that's the reason why you were a little devil or an angel, is when you just send assets from one non-custodian to another non-custodian. Is it legit? I can give you a coin, I can give you money. There is no bank in between this. But I don't know, am I giving you money to go to buy tanks or to buy drug or to paint my house, or just because I like you and I give you money? But you're a banker, you're quite normal, isn't it? Oh, you're a banker, sorry. So, I confuse you. So, you see that that's one example of regulation where we as operational entities have to deal with. And we have to take actions every day and every single hour because, well, we have 10,000-ish customers and they are doing operations on a daily basis, like you do in the bank. So for this particular rule, coming from the ground up, next slide, please, we might give a little piece of advice to the regulator or food for thought. So we as VASP, as regulated VASP, we want to be the gatekeeper. We want to be the gatekeeper between the fiat world and the crypto world. You've understood that we take all the measures, we have all the procedure in place to do that. So the travel rule is achievable, but we will have concerns with GDPR. Because if I send to the US-based VASP a transaction, well, he needs to know about my customer. GDPR rules might be, with the US, it's quite okay, but with another, a little bit sexy country, might be a problem to respect the GDPR rules. From non-custodian to VASP or VASP to non-custodian, okay, there must be clear rules. There must be clear rules, and we're going to have an idea about this, and they must be applicable. Because it's nice to say, we want this, but in the practicality about the blockchain, it must be implementable. Once again, those rules must be applicable by the RegTech in order for us to operate, because we cannot do everything by ourselves. We have to cooperate. And it must be, and it has been also underlined, it must be on the level playing field. Not something here, different there, especially in Europe, but what about the rest of the world? Next slide, please. And then typically the operations or the companies that are operating in this have some discussion among us, of course, and this is a good place to have them. We believe that a system of whitelisting of the wallets, of the non-custodian wallets, could be one option by just saying, okay, as you do with your bank account in Lithuania, because everyone here has a Revolut or an N26 account, of course, you have the Point Central, the contact, what's the name, the exact name? Can you repeat? The Point Contact Central. Who knows that as me, as Benoit, I've got a N26 account in Lithuania, sorry, in Germany, a Revolut in Lithuania, a bank account here, a bank account there. If you whitelist this by saying, here is my wallet address, my private wallet address for Bitcoin, the one for Ethereum, the one for Solana, just name them, and you plug that in a blockchain, well, it's very easy for transfers or transferers to know, is this address safe? And even we can go one step further by just saying, hey, give me your wallet address. I put it in a website and I got a green light. Okay, it has been declared. It is a known wallet. So I'm sure that I'm sending money or assets, because it's not yet money, I'm sending assets to someone who has made his duty and his due diligence by declaring that his wallet is okay. And on the other way around, if we as VASP, we are receiving digital assets from a non-green address, well, we might be saying we refuse them. We just send them back. By this, saving the customers and protecting the whole ecosystem of the cryptos. With this, I will be there for any question you want.
Practical view, and thanks for the food for thought. Our last speaker, and then we will go to the panel. Yes, and you have your power bank there. It's Simon Polrot from the European Crypto Initiative. So I would ask Simon to come on stage. Try to be short to explain everything about the EU initiative because you're standing in front of the panel. So go ahead with this nice pressure.
Thank you very much. So I will be very short anyways. The idea was just to present very broadly the European Crypto Initiative and what we're trying to do. So basically you've heard already that there's a lot of things going on at the EU level. I'm a policy specialist in crypto in general. I co-founded the French Crypto Assets Association a few years ago. And I saw that most of the things were moving at the European level very quickly. So the idea was to push these initiatives and push this policy work at the EU level and to bring a vision, a clear vision of what crypto can bring to the European market specifically at the EU institutions. So basically, that's what we are doing at EUCI. We're working with the EU institutions. We're working with the different policymakers, and we're helping them understand what's going on the crypto world, changing very quickly. You've heard about DeFi, you've heard about DAOs, you've heard about all those new subjects that keep popping up. And then we try to reconcile all those things with the initiatives from the Council, from the Parliament, from the Commission.
Sorry, it's just apparently there is
And Nico,
yeah, and I don't know if it's this one.
is it working?
Is it better? Yes.
Okay.
Sorry for that.
Thanks, no worries. So yeah, that's basically the EUCI. It's an initiative, and it's brought forward by different member states. So we have basically the founding team is French and Belgian. There's a German representative and then a Slovenian representative, and we are building a team that will basically bring forward a unified vision for Europe. We deal with all the different issues that are in the news for now. So of course TFR, the new anti-money laundering regulation, MiCA, and what's next. There's a lot of new regulations that are touching crypto, that are touching smart contracts issues, that are touching also data protection, and all those things that are intertwining with the crypto world in a way or another. And yeah, the idea is really to help Europe to have like a unified and clear vision to bring innovation forward, because you all know that crypto can bring a lot of positive innovation. At the same time, of course, having an equilibrium with investor protection and the mitigation of the risks that crypto are bringing forward. So that's what we're doing at EUCI. Thank you for listening, and don't hesitate to ask questions.
I'm going to ask all the speakers to come up front and take a seat. I'm going to start by reading out the first question that we had from the audience. So going to the top of this, I will read it out for everybody, but it will be on the screen also. So this is a question from Koen Rens, who is providing software for analyzing the crypto markets. But he says that his payment provider, sorry Molly, they just canceled him after approving, and he's looking for others. Others were suggesting to use Stripe. They also didn't manage to get through there. And I'm trying to find the exact question here, because this seems like the online help desk of how do I get to sell my services everybody seems to be flipping over the idea as soon as you're a provider doing anything with crypto. And all those providers say that they are okay with it, but they don't qualify. So for those who are following the thread here on the screen, I'm looking for your question, Koen. So if there was a question in here, this is like, it seems like a long complaint in naming those who are not willing to serve you. You're looking for a solution. So if anybody has a solution, or if any of the speakers knows about this, maybe let's go to the lawyers. Have you heard about this behavior? Can you please remember? So this is a software. So from what I get here, I don't know the specific case, of course, but it says I'm providing software for analyzing the crypto markets. So it's a pure software solution. I'm assuming he wants to build customers for using his platform, and all the payment providers are sort of locking their doors for him because he is a crypto service in their eyes. I assume. I'm now translating what I think is the question here. And I would say, please, if I'm badly translating you, is there any payment provider that accepts crypto payments? Ta-da, that's the question. Bit for you, just raised his hand.
Well, then, no, it's very simple. Not later than this morning,
Yes.
a communication company opened a account,
Yes.
a user account on our platform, in order to get their customer paying them in crypto. Okay, we have the KYP where we ask for the UBO, where we have everything. So there is a long list of documents that those people have to provide in order to be recognized as a business and a professional. Then, if they just want to give the QR code to the customers, they give it, they pay it in Bitcoin, in whatever, but it comes into the accounting of the company. It's not very complicated. It is as if you would have been paid in dollar or in Turkish lira or in Brazilian, I can't remember.
Yeah.
The real. The only problem is that something that mainly in Europe we've forgotten is the accounting in high volatility or high inflation and the multiple currency. So the good accountants now may be 65, 75 years old, because they will remember about the 12-ish, the 15-ish% inflation that we had in the 70s and 80s, and that was used to deal with multiple currencies. But basically being paid in crypto is not a problem.
But the accountants will not love you for it.
Yes, of course, because it's a lot of work.
Yes. Okay. So you should they can build it.
Excellent.
So there's an opportunity for those looking online to build the in-between platform for accountants to have something like the annual statement on what happened crypto-wise with this in and out transactions.
I think it's already there, Tom, because if the company receives the money or what should be paid in crypto, you can immediately exchange it into cash.
Yes.
And you can withdraw the cash on certain platforms. So basically, even not withdrawing the cash is sufficient, because then you have the value, the underlying value of the crypto for your accounting system. So there's, as from an accounting perspective, I see no problem.
I think your neighbor was referring to the fact if you do not convert and your crypto coin underlying doubles in value, at what value does the accountant put it in the books? And the VAT? And what is the VAT applied to that? So indeed, Pierre, your solution of transferring it on the day spot rate solves a lot of issues. But then again, yes, what if you don't convert it into fiat?
There are answers.
Okay, go ahead. I love it when the audience gives answers. Go ahead. Our camera will film you, just so you know when you talk, you will be filmed.
Commission of the accounting norms, I think,
yes,
wrote something in October 2021, and they told us that we have to account, right, in the accounting, the amount of the crypto you bought, and every day you have to update the value.
Okay, mark to market on a daily basis. No, mark to market. So
yeah,
get the price on it.
So there is a rule from the commission. So
yeah, but just what you say is just an asset class in your accounting. That's true. That's what they said, and you have to value it on the date of your
yes.
You publish an account or on the date you leave an account. And that's on the spot rate. The question is, what is a spot rate of a crypto? Because there's still arbitrage between different platforms, but that's also a different story. But
that's the same story for your stock in your account. What's the value of the stock?
yeah, but
So I think the answer is quite easy. And for the question from Koen, I think the main problem is to converting crypto to fiat, and that's maybe the banker with to answer this question, because a lot of people want to set up business in crypto, receiving payment in crypto, then they can use this crypto to pay the energy bills or something like this. So that's the main struggle right now in the blockchain.
I'll hand your question
Yeah.
to the banker here. What's the position of the bank today, and how do you expect it to evolve? No guarantees. We know you cannot speak on behalf of the banker.
Yeah. But in fact, when we receive a wire transfer coming from an exchange platform, most of the time that comes from a crypto, the reasoning will always be the same. It's the origin of the fund. It's like, can you prove where it comes from, and so on. So there, of course, we know there are lots of tools on the market, chain analysis. I mean, there are many tools that can help you with this today. So I think that with time, this is going to get better. But for the moment, it's just that it's complicated for also individuals. If I take the individual case, just to prove that actually it was really their money that increased in an exchange platform, and so on. So let's say it's the combination of the system that we use today to check the origin of the fund, and something that is a bit new and that don't have all the pieces of the puzzle. But with time, I think it's going to get better. Yeah.
But the interesting question for the bank will be, once the VASPs are regulated, are you going to trust what the VASPs have done? Because they should have checked the origin of the funds. So the money is, as you have a bank-to-bank transaction, the money is in the system. If the VASP is regulated, the question will be, will the banks trust them as from the 1st of July? That's the main.
I can give a very practical example if you want. You get an email saying, okay, I want to bring a lot of cryptos from Binance. Sorry to tell the name, because it's too much to put on my Visa and to spend through my Visa, because I cannot get a SEPA transfer, wire transfer to my bank account. Can you imagine? Okay, what are we talking about? 100 bitcoins. 100 bitcoins. Okay. Well, we will not give, as we say in French, le blanc-seing. We can give the technical aspect that those bitcoins have through the soft that we are asking, so a source of funds. How did you acquire them? The guy showed us, I inherited from a house, from my grandfather. I sold it. Okay, all the papers from the note. I sold it. I put the note, the amount, the money on my bank account. Good. I sent all those monies on a monthly basis to the other crypto platform, and I just make what is called DCA, so buying on a regular basis, not trading, just buying a couple of thousand a month. Buying. Okay, fine. And then, well, when you buy a Bitcoin at 6,000 euro the Bitcoin, or first one he bought it at 3,000 or 6,000 euro the Bitcoin. It's not a lot of money. And he was not changing anything. And so he gave us the access to through the API to his account on the other platform. And the technical guy in the office said, okay, he received, and he has got 100 Bitcoin. Purely legal, no problem. But we will not, as a platform, give the I don't know what would be the word in English. The proof, we give the technical proof. So we are, in this case, and it's not the only one, okay, the 100 Bitcoins is maybe the example, but we ask them to go to a specialized lawyer to give all the file I would say a stamp, because the day we get it from, the day we say, okay, send them now, you show everything is fine, send them to us, we get it on the platform, and indeed it is to give it outside, to realize it, to fiatize it, I don't know if the word exists, and so Well, we sent to BNP 4 million. Boom. They said, hey, where is it coming from? Hey, we have the fight. We have the fight to prove that, to prove the source of it. And until now, it's quite successful. Our users can withdraw money, fiat money, on a daily basis. And the banks, more and more, are trusting us.
Or do you think that there is really a kind of extra cost due to the specificities of the industry?
I think that in the banking world,
yeah,
you have hundreds of thousands of users where you can amortize costs. And I think that the current user in crypto are more active, are doing more transactions per user per day than a banker, because they are changing that, trying, they are doing it. And also there are things that are unknown. Well, I'm sending, or someone wants to send cryptos to a non-custodian. What do? We do a manual analysis. This one we don't know. Shall we let it pass? Okay, what are the 250 criteria saying about the security, the fraud, the things? Okay, we check. We are helped by the system, but it's okay. We feel that it's okay. We go further. We leave it. It's not enough to say, guys, are you sure it's you? It might be a fraud. It might be an identity theft. It might be what's else. But there is still a high level of manual intervention.
But I do agree that at the end of the day, VASP and banks are very similar in many things. The business model is the same. The structure of the company, the costs are in cybersecurity, compliance, acquiring customers, and so on. So it's pretty similar. So I do agree that with time, this is going to get better.
Yeah, I would add that it's probably a question of time to get the feedback on the experience we had in France. The VASP regime was applicable in France since 2018, and it's only now that the banks are willing to open bank accounts to VASPs in France. So before that, VASPs had to open bank accounts outside of France because they couldn't open a French bank account. So this is slowly changing, and it's very good. And I think European regulation is also bringing a lot of value in that because it's harmonizing throughout the whole Europe those controls. But it's not a magical thing to have a regulation. It doesn't force or maybe change the banking industry magically. There's also an effort that has to come from the banking world to understand and maybe also on board on this new class of assets.
I think they've started to see.
The question here is something that you raised: how MiCA will, if and how MiCA will change the attitude of banks, because the problems that you have mentioned of not opening accounts or blocking transactions is a pan-European problem, and it's not so much about being regulated or not. It's about having the bank trusting the third party to do the MAL, KYC, right? So because in some of the other member states, VASPs were regulated before, and it didn't help them get better trust or more trust on part of the banks. So with MiCA, it might change, but very often it will remain at the discretion of the bank, whether they would like to use the pretense of keeping high quality MAL, KYC procedures as a means to find competition, because this is also one of the reasons why the banks do it.
I would allow 2 questions from the audience because I'm impressed for time. So, first question, so your hand going up before? And
why wouldn't it be looked at like stock? Some high-level people in companies are paid in stock. Earlier, I heard how is the value going to be put into the books for those people? That changes as well. So why won't you look at crypto values as stock value?
You can look at it as an asset class, that's what we said, but that's once it's in your system. So once it's on your balance sheet, you value it on a daily basis, on a monthly basis, on a yearly basis, whatever you do. The problem is when it comes in, difficult to get the right valuation. Okay, you can give it evaluation. In addition to that, we have certain problems around what's the VAT part, what's the so we have some, but you're right, you can value it as stock, but again, you easily get into discussions. How do you qualify a certain token? How you qualify a certain crypto? Because I can tell you, we are conducting for one of the largest platforms in the world a survey in Europe and in the US where we are assessing 250 cryptos, and it takes like 1 week to assess how to qualify how such a crypto is. So it takes like time to read the white papers, to give the qualification. You can have we've seen it on the slides. It can be a utility token, it can be a payment token, it can be an e-money token, it can be a security token. And also from an accounting perspective, I'm not an accountant, but it could make a difference what it is.
And we are trying, I think, to get, okay, what does it look like? I know. Is it a stock? Is it ePay? But the blockchain is much more than that. Okay, the applications are maybe close to what we know, but it's much more than that. And we talk a lot about the negative sides because we are here about regulation. Don't forget, please, about all the positive sides that it can bring, right? All unbanked people, fast money, securities. There are so many applications. We are just scratching the start of what the blockchain, not the cryptos, but the blockchain can do.
Last question from the audience. I saw a few hands before. Yeah, go ahead. Sir. Yeah.
I received today a news feed saying that the EU lawmakers have supported controversial proposals to outlaw anonymous crypto transactions. So, yes, I'd be curious to know from any of you, what do you think would be the impact on VASP's operation when that comes into law?
So maybe just to clarify on this, that's the whole TFR, Transfer of Funds Regulation discussions that's been happening. Yeah, so basically the whole anti-money laundering regulation is being revamped at the EU level, and there's a part of it that is dedicated to information transmitted between operators in the financial world, but this is extended to the crypto operators. So the crypto operators will have to collect some information about their clients and to transfer them to their counterparts being other VASPs or financial institutions, etc. And the scope of this regulation has been into discussions, and before the Parliament, there's been a lot of amendments recently that have been validated that extended the scope of those information collection, verification, transmission to the so-called unhosted wallet, which is indeed the personal wallets that you can have a ledger or anything. And this brings a lot of questions about how the VASP will be able to, you raised those questions, how the VASP will be able to verify those information. Is it even logical with a GDPR perspective? Even for privacy preserving mechanism, if you are collecting all those information in centralized entities, is it really a good idea at some point? And you are basically creating a register of personal clients that's in a centralized way, which is maybe a bit dangerous, but there's a lot of different questions around that. But it's true that the Parliament is pushing for an extension of the scale of this regulation to all the unhosted wallets. The thing is, it's only the Parliament for now, and the Commission and the Council don't have the same positioning. There will be trilogues where the three institutions are agreeing on the final version of the text, and this is where the key choices will be made, either to in fact expand this scope with all the issues that we have in mind, or to get back to the Commission proposal or the Council proposal that are, I think, in a very more pragmatic way, excluding those unhosted wallets from this regulation. So it's still undecided. But of course, if it would have been expanded, it's probably a bad thing for Europe in general, because it would be the only area in the world where this obligation would apply.
And there is a side effect to that. I like the libertarian. There, you will have no gatekeepers. If you don't find a practical solution, well, I have cryptos, I want to pay you, I will pay you in crypto, because if this is out of the sex system, or out of a regulated system, I will pay you pizza. Okay, you remember the famous 10,000 Bitcoin for 2 pizzas, but it will be the same. So this money will be definitely out of scope. Because I will pay you half, I don't know, a tenth of a Bitcoin to pay my house, then you will put that further to someone else who accepts. You know, with the inflation today, with the increasing of the cost of life, it's all what we see now. But people will find solution to use their crypto if they don't want to declare it on a whitelist or just name a solution. And this will create then we'll have a totally parallel world only in cryptos, and there that's the nightmare, because you don't have gatekeepers in the middle.
So we have the decentralized dream of crypto, and then we have the centralized gatekeepers who will hoard all the data to approve this is legit source of funds. Maybe two reactions on that that you can find?
I agree with what Benoit said, but probably probably it will be hard to avoid this evolution, and that's why I spoke about a kind of safe harbor, because you won't be able to regulate all transactions, and indeed the transfer of fund regulation regulate the transfer between service providers, but you risk a lot of transactions, and probably the more risky ones. On the other hand, and I'm just speaking just not as FSMR member, just as it's my personal view, but I followed all the discussion of the council as Belgian expert, and my first thought when I heard that they wanted to apply the transfer of a regulation to crypto is, okay, is this really consistent? Because you apply a regulation made for centralized finance to blockchain. So I don't know. Okay, it's probably now decided, and we get this regulation, but I'm sure we will have a lot of questions in terms of interpretation.
With that, I'm going to have to close because the timing is up. But a regulator who says they cannot regulate anything, that's news. So I think it's a very pragmatic way to accept the reality of the crypto world. So on that note, I want to thank all the speakers for their great insights. For those who made it in this room, you can now go to the 8th floor and show us how quick you can do that with fresh air and nice food. And you can keep talking for your other questions directly with the speakers. So follow our events. See you soon.